Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market wrap-up for this Wednesday, and this is the 12th of April, 2017, just getting on to 4:15 p.m. Central Daylight Time. I can only tell you this is a crazy day. There was so much news coming out and so much waves back and forth on the news that you could step away from your computer, you come back, you're hitting the side wondering where the quotes were right. Example, in the foreign currencies, you're going to see settlement prices here. This isn't anywhere near where the markets were at the final end of the day. That's what I can tell you. What the markets did is President Trump came out and made a statement late in the day, and the dollar was a bit too high. So instead of the dollar being here, it tanked and tanked sharply. The euro rallied up towards the day's high. Most of the currencies up. The gold market off that statement, closing near, well, I used that term wrong, trading near the highs of the day as the market finished. The stock indices, well, this is where they finished off pretty much close to that at this point. And we saw a gradual sell-off in a number of the different energy markets. Now, if you take a look at what's going on with the bonds and notes, you've got a yield here that got under 2.3% in the 10-year note. Yeah, under 2.3. It hit 2.28 after the president made the statement. Now, there's differences in what's going on. The president has just decided not to name China as a currency manipulator. He explained, and you'll see part of that probably on different news editions tonight and everything, as to when he told the Chinese president that the U.S. had just attacked Syria. And in hearing his conversations, I can tell you, and I've listened to as best as I can everything that he was talking about. The Chinese president agreed, you don't drop that type of weapon, according to what Mr. Trump is saying. I think you got truth out of that because, for a change, China abstained on a vote when it came up today at the UN about Syria, and of course Russia saying no, and they can block anything the U.S. wants to do at the UN. They have that type of power within there as the U.S. has against them. But it was interesting that some type of peace is happening and understanding between the U.S. and China at this phase. I use the word this phase because it all changes. But as we go to the weekly charts on the NASDAQ, tomorrow's the last trading day of the week. We have Good Friday coming up, so that's it tomorrow for the week. And as you can see, you had a weekly reversal the week before and follow through this particular week. When we come to an area chart of closes for the June NASDAQ, you've gone from 54.44 down to the low close right now of 53.72.5. So the market is definitively breaking out to the downside temporarily. I use the word definitively, and then I counter that so fast, but that's what you do in this type of market, because if you look at it, you're caught. In a trading top there, you can argue that you got a trading bottom right down here, and you're almost midway in that whole crazy range. You are stepping the ladder down. So the swing line does have the pattern of lower highs, lower lows, which means the trend is down until the market takes out the most recent high, right now at least, of 54.4375. That can alter to today's high if we don't take today's high out tomorrow. Got that? So if today's high is not taken out, believe me, I'm going to take that arrow, move it pointing down that way. Where's the battleground? Crystal clear. 18-day average of closes. Now you've got the market under it. It was under it yesterday, so we have downside bias. The trend is down at this point. And if the market falls further, it might be headed towards that 53.42 level, the lower Bollinger Band for support, which puts it closer to this double bottom area that the market had as well. But the trend for the time being down, and momentum is with the trend. They're not fighting each other. And we had that so often recently in these whipsaws that you'd come down and one wasn't with the other. Right now, momentum's down, swing line down, bias down. When we come to the S&P, same thing. Momentum now starting to point down, finally. The market fighting a battle at the 18-day average of closes. Look at how many times it was hitting it, including today, trying to come down to that lower Bollinger Band of 2334. So that's the projected support in the market. You'd have to take out 2363 and a quarter to break this pattern right now. In the Dow, the trend is down. Lower highs, lower low, trend down, momentum down, 20,462 on the downside. Looking at that as a potential wave there. And then the Russell, which tried most of the day to act well, because it was up sharply as the other currencies, as the other stock indices were down, gave up everything late, and look at how it closed right off the low of the day. Momentum down. You broke the uptrend, and here's how you broke it. The market had a pattern of an outside day up, a lower low, so that gives you the higher high, lower low. What's my rule? That you should not take out this low within 2 business days if it's real. Otherwise, you have what's called a bull trap. The market went up, took it out. I would not now be surprised if the market makes a run to the 1338 level as the trap has been laid. In adding fuel to the fire, the 18-day average of closes got under the 100. So you have a bearish crossover, prices under it, everything set, including momentum if this market wants to fall further. In the VIX, you have another up day. That's 2 in a row, so you can't any longer say that you hit it, you pulled back in, you hit it, you pulled back in, you hit it, you pulled back into the Bollinger Bands, the black dashed lines. Yeah, now you're 2 days over. You typically only stay 5% of the time over, so I would rate the chances of this continuing at about 3%. In other words, I'm looking now for 97% probability that price will pull within the the upper Bollinger Band. Why? Well, one of the things that I teach and have learned is that if you go and you count the amount of days a market spends consecutively over or under Bollinger Bands and run them in the gamut of commodities. Some people can do it commodity by commodity, even get better percentages. But 5 to 7 is really stretching it. Can it go more? I've seen it go more. But we're talking how do you trade in terms of using the real probability. If you're going to play for that 0.11% chance that it'll keep going, terrific. I don't care about that. So I'd rate it now because I related out of that 5% probability of staying over, the 2 of the days were wasted, 3%, 3 days left out of 100, 3% probability of staying up, 97% if not. That doesn't mean you get bearish. Nothing on this chart is bearish. So it's just a question, does it pull back within it? When you come to the 30-year bonds, you got up and well over the upper Bollinger Band, and bang, at the end of the day, the market settles right back slightly under it. I mean, classic what I teach, that's where the pros, that market are slightly higher. They're taking money off the table. I'm going to say the same thing about the 10-year note. Look at how that worked out. And when you come to the dollar index, you go all the way down, hit the 18-day average. Now, what's important there is when you got to that low of 100.01, it took out the previous break bottom. So now you have a higher high and a lower low. You have no trend. The market comes down, hangs right here in an overbought territory, but bounces off President Trump's speech. Who knew he was going to say anything like that? But that's where I think the pros, anyways, were taking a look at the market. It's that, how do I call it? The reset line. It's that line in the sand. So often markets get up to it and they stall, fall to it, they find support. You can go back on your chart. You look at it yourself and come to your own conclusion. I can only tell you what I believe. In the euro currency, you got all the way back up today to the 100-day average, and the market settled down. Now, it didn't, while it settled this way and it looks ugly on the chart, I am telling you the market's sharply higher than this because the settlement price is taken before prices quit trading by a lot. And therefore, it was up sharper. But on the chart, and that's all I care about, you have a market that still is bearish with an embedded reading. That, to me, is still down. The British pound's different. It took out 125.27. When it took that out, you destroyed the pattern of lower highs and lower lows. I'll show you that. It all looked good up until today, and today was the key. The market had to break back under these numbers if it's going to stay down. Instead, it went up, and you can see that the market breaks that pattern. So what I think you have now is confusion. Is the pound bullish or bearish? It doesn't have a swing line in favor. You are over the 18-day average of closes for the first time in several days. Let's see if it stays there. Momentum has gone flat on the chart. As we come to the Japanese yen, the market got a good bid and is able to stay right at the upper Bollinger Band. Late in the day, it got up there, it stayed there, but you still have a pattern of a higher high and a lower low, and you're overbought. A lot of confusion. As I said yesterday, and I'll repeat it for you, this is a currency that's a safe haven play. And when you get fear that there's going to be a war with North Korea, when you get fear that the U.S. might attack something else, when you get fear off of Russian-U.S. relations, when you get fear, this is a currency that gets bought, and that's what happened. In the crude oil, I wish I could say I'm surprised, but the market's caught between the 100-day average and the upper Bollinger Band, fighting a battle here. We'll see if it stays over. It can, because for a long time it did stay over that 100-day average, then it got under it. So I don't know that the 100-day average has the same importance that it normally does, because this is a number that's been hit recently. It has stayed over and under it for literally 30, 40, 50 days at a time. So I just think it's another number that the market's fighting with. When we come to the gasoline, it's the same thing, and notice how the market didn't get up to the upper Bollinger Band. But what are you seeing? Embedded reading. What are you seeing in crude? Embedded reading. That is bullish, and until that's lost, there's nothing bearish on the chart. And I wish I could say I'm surprised, but boy, this is just what we teach. The market falling, let's take a look here. You are overbought, you start down, momentum lost. If you go down, I'm looking for the combination of support at the 100-day, the 18-day average. Market comes down to it, closes slightly under it yesterday. Today it tries the downside, doesn't like it, and comes right back to these numbers. Market is looking for what? It's looking for direction, and it probably hangs here until it can find it one way or the other. That is just so typical of what goes on. I want to talk to you about Modern Trader, a free one-year subscription. This is the May issue now. So you're looking at the issue that just came out. It comes together with Market Focus. Now, it's a $79 value. We're able to give it to you free because you're going to get it by email. You're going to get the Modern Trader by email. You're going to be able to keep up with what's going on. And because it's through us, with the permission of Modern Trader, you get all this. Now, trend following, where's the money? Euro seasonal, chalking, elegant measure of the tail risk. What is that? Curve flatness, get paid to buy stocks. How do you work with all this? So there's options, there's ETF thinking, there's talk about fundamentals, there's talk about derivative trading, all the neat ideas that you can get. And then it's backed up, as I said, daily with new stories out of Market Focus that come in until the next publication comes out. To get your free one-year subscription, simply call us or go to our website. You can sign up for it there, and you can even get it right here. Remember, folks, if you're out of the U.S., it works as well there. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.